So, Lewis, it's been 3 months since we sat down, which means it must be time for another BMI property update. What's been happening since over the last quarter?
Strangely enough and boringly enough, not a lot, because we've had summer in between, obviously. I think the expectation when the announcement of the agreement came through in June was that things would dramatically change immediately and we would suddenly see a booming market come into play. I think the reality was that wasn't going to be the case. I think we more or less alluded to that. The news of an agreement was great news. It continues to be something which instills confidence in the market. But summer obviously tends to be, and historically tends to be, quite a slow period. We expected that to be the case. Rentals has continued to be very, very good. But insofar as the agreement coming into play and changing things overnight, no, that hasn't happened. I think now we are into September, coming into October. We are likely to see some of those green shoots, if you like, of recovery, if one wants to call it that, start to happen. And we've already seen that in the first few weeks of September, already the interest in purchasing properties that are available, people that can move into, not necessarily off plans, certainly from our perspective. There is, if you like, still a little bit of nervousness in the market, and I think it's more about waiting to see what the impact of the agreement, which I think we all agree is positive, will be, and over what period of time we will see that come into play. I think invariably these things, by the time you've realized that it's happened or it's happening, it happened a while ago, and therefore it's just checking out how we move forward.
The agreement was announced just before the summer, and as you say, summer has been kind of quieter, there hasn't been much movement. Now we're back. Where do you think those the impact is going to be on the market of the agreement announcement?
I think that there's a number of things. I think from a local perspective, not much has changed or will change, because the local market is driven by locals who are here, and invariably, as much as there may be changes, locals will be here long term, and therefore that market has continued to trigger along, certainly with the affordable housing schemes, with the lower end, etc. I think the change that one might expect, which we had already started to see, and we've seen historically over the past 25, 30 years, I mean, let's not forget that the finance centre, the economy, the e-gaming, etc., has brought in high-value clients coming in, seeking a good location like Gibraltar to work in, to invest in, etc. The biggest issue we had up until the 2016 Brexit referendum was always the element of the uncertainty. Brexit brought that even more into play, and therefore we, particularly over the last years, have suffered from that. With an agreement coming into play, I think what we're going to see is a lot of what we've seen before, but with a huge degree of stability, of certainty, of knowing where we are going to be in the longer term, and being able to say to a client, this is what you've got, this is what we can provide you. And I think that says a great deal. So if you look, if you like, a little bit about how we've progressed historically, and the factors that have allowed us to progress, I think what we've got now is that, but if you like, on steroids. So I think we're going to see the likelihood of a lot of high-value clients who are either already renting or looking to relocate from places, for example, like the UK, where, you know, with the Labour government, with the instability, insecurity that there is in the UK, taxation, etc., will be looking at jurisdictions like Gibraltar. With that certainty that we're now able to provide, I think we're going to see a bigger amount of people looking to Gibraltar and relocating to Gibraltar, and that will, I think, impact the middle to higher level property sector, if you like, and nothing new other than we've seen this before, but I think it's now very much firmly in play, and what we're likely to be seeing in developments like Raggedstaff, King's Wharf, Midtown, etc. And let's not forget that they will have their own criteria insofar as what they have to buy. This is no longer a situation where people can come in and rent out or buy a studio or a small one bedroom. In fact, already those things are changing from a financial services perspective, a financial centre perspective rather, where properties that may historically have been approved for high value Cat 2 HEPS clients are now actually being looked at on a case basis and may no longer be approved on the basis that that threshold will increase slightly because of the fact that we're seeing more people, or we're likely to see more people coming in, and there will be an expectation on them insofar as what they ought to buy and rent.
Obviously, since we last sat down, the agreement's been announced. As you mentioned, there might not be any short-term kind of changes from it. And I know this is a quarterly update, but can you tell anyone who's watching to put your, look further for in the future? What would be the bigger changes coming on the horizon?
I think that the bigger changes we'll see, and it really it's that the whole design of the agreement in the main has been driven to protect what has been successful over the past 25 years, and that's the economy, and within that financial services, e-gaming, insurance, and other related services that we have. So I think that element alone is going to drive the market in the way that we've seen, but obviously now with the certainty I talked about. I think invariably because of that we will see, and we are seeing, high value clients, family offices, private clients coming in, investing in Gibraltar. I think that changes the dynamic, the culture to a degree of Gibraltar. It's something that's been slowly changing over the past 25, 30 years, but maybe more acutely so now. Is that a good thing? In general terms, yes, for the economy, because without it, the economy would not have survived in the way that we've enjoyed as Gibraltarians, that we've enjoyed it, and I speak as a Gibraltarian, of course, myself. But I think the reality is we have to accept that there will be more high-value, wealthy clients coming to Gibraltar because of the benefits that they will have by becoming resident in Gibraltar. There will be an expectation, as I mentioned before, insofar as what they can purchase and what they can rent. This isn't just a freebie of anything. There will be an expectation of how much they're worth as well, and I would imagine that the Finance Centre is already looking at changing those thresholds too, insofar as the value that one would need to declare insofar as self-worth, net worth rather, to be able to apply for residency and Cat 2 or HEP status in Gibraltar. I don't think that's a bad thing, because the access that they're then able to enjoy by becoming resident in Gibraltar is pretty special. English speaking, English legal system, regulated in Schengen, access, freedom of movement into Spain. I think
the benefits are endless.
these are huge benefits, and therefore, I suppose one needs to be careful and act with caution so far as the volumes of people that may be interested in coming. But I think invariably that will start to happen, and it goes back to your question of, well, why may we not have already seen this huge growth since June? Well, it doesn't happen overnight. But I think already we're starting to see these things.
How would you describe the state of our kind of sales sector and of the market?
At the moment, as has been the case for the past couple of years, it has been slow. We've seen properties go on the market being sold. We've seen a number of fall throughs, and I think that's another indicator of the market being a bit nervous. People going for properties, then pulling out, chain sales not completed, and I think that's just been the mood over the past 2 and 3 years since. I think I've mentioned this before, 2022, I think, mid-2022, but we're starting to see that change, and I expect that confidence to come in, as mentioned already, quite sort of, not aggressively, but certainly to come in soon, and we're already starting to see that now in September, October. I think the reality is that we'll hopefully see some good positive notes towards the end of the year and beginning of next year.
With the state of the market, it's slow, but there's positive kind of signs on the horizon. Where are the opportunities for anyone who's looking to buy a property right now?
I think there are opportunities everywhere, because the reality is that the rates per square meter and prices have fallen and been dropping on average by about 5% per year over the past couple of years. In certain situations, we've seen the value drop in certain properties by up to 25-30%. That's not to say that we can't ignore the fact the market grew by up to 50 to 100% between 2020 and 2022. So it's not really been a recession, but more of a realignment. Look, there are movements and interesting. We've had recently some people investing in actually high value developments where prices haven't dropped, but because they feel that these are the key areas that will continue to grow dramatically when we see that push. For example, like Key 31, Key 29, particularly Raggedstaff Wharf and Cormorant Wharf, which are the quayside marina developments. Now, is it a good deal to buy in developments where we've seen very little movement going downwards? In fact, it's maintained that high level rate per square metre of 10, 11,000. Some may argue no, because others have fallen more. Some may argue, as has been the case, that actually it's worth going for these properties because those are the ones where we'll see even bigger growth as we see the agreement, if you like, come into play. There are situations we've had where we've seen some properties come down by, as I said before, 15-20% in developments that people consider good value, that has and that are enjoying, if you like, good returns from a buy-to-let perspective. Let's not forget that from a buy-to-let perspective, rental yields came down from 4.5%, 5% that we were seeing down to 3.7, 3.8, 4.1, 4.2%, because values have come down in different areas and rentals are actually doing okay. There are opportunities in some rental buy-to-let developments and investments which could be interesting. I think a word of caution, if you're going to go for that sort of product and you want to invest in that sort of segment, if you like, do so where there aren't huge volumes of these properties. I've always expressed some caution with respect to studio markets and small units. I continue to do so. I'm not saying that there isn't a space and a market for them. I would just say that if you're looking for investment, do so in segments where there isn't an oversupply. Now, at the same time, you could pick up some great value properties because there is an oversupply in certain segments, like studios, etc. And that might be something that people want to go for. So I think in general terms, and I think I'm trying not to be vague or be all things to all people, but I think there are movements and spaces for investment in all aspects. Depends what your profile is. Finally, we see some private investors and family offices coming into Gibraltar who are looking at a specific property model, if you like, buildings that are well let. The commercial sector, if you look at offices in Gibraltar, that again generally hasn't seen a huge downturn insofar as people leaving. In fact, quite the opposite, where we may not have seen property growth so far as value is concerned, and it's sort of been a bit damp. What we've also seen is that not many people, if any, or companies have left. In fact, they've all stayed. We may have struggled to bring in a lot of big new companies, but those who have been here during that growth have remained here and continue to do so. I think that says a great deal. So there's obviously margin and interest in that commercial activity. I think there's also huge potential for how the retail sector is going to change with the agreement. I think the business model of the retail sector may and will see changes with the transaction tax which comes in, and obviously that will affect retailers and wholesalers to a degree. And as much as, yes, it could be nerve-wracking and I'm sure concerning for those in that sector, I think there are opportunities. The fact that we plan and we foresee more high-value clients coming to Gibraltar who will invariably need to spend time in Gib. We're no longer brass plating. We're no longer seeing, as we did years ago, Cat 2s and HEPs individuals coming into Gib and saying, well, I'll just rent out an apartment but actually stay in a hotel for the 4 or 5 days of the year that I'm going to be here. Yeah. These are people who are actually spending time in Gibraltar and therefore spending money in Gibraltar. So I think the retail business model has a great deal of scope. I'm not in the retail market, but I'm sure there will be opportunities.
Some opportunities there. You may not be able to answer this one, and I think again it comes to the crystal ball, kind of looking at trends, etc. With the agreement coming in, you may have some people who choose to rent, for example, in Spain. Does that have any impact on the buy-to-let market?
Well, I think that there may be some changes there. I think it's one of the things I touched on with the studio market. Sometimes, I mean, I always, you know, I'd love to be proved wrong because it'll be good for all of us. But I've always wondered where the end user is really going to be with the volumes that we're building. I think that, you know, when you say, I think you mentioned the word danger there. You know, from a cultural point of view, Gibraltar, I think. You know, we'll see changes. We've seen that already. I mean, I'm happy to declare my age. I'm 52, and you know, when I was a teenager, Gibraltar was a very, very different place to what it is today. You know, we knew everyone. You could walk. You know, as much as it continues to be a safe place to live in, it's the dynamic and the culture of it has changed dramatically. I think that there's potentially a danger, danger or not. I mean, for young Gibraltarians to, and they may choose to do so because it's what they want to actually take the opportunity of living in Spain if they want to. You know, I've had clients come to me and say, you know, why am I going to, if there's a freedom of movement, I can live in Gibraltar, I can work in Gibraltar. Yes, taxes in Spain are higher, etc. But you know, why am I going to spend 250,000, 300,000 pounds on an affordable housing property, for example, which I have a right to as a Gibraltarian, when I can spend 200,000 euros for a townhouse or semi-detached villa in Santa Margarita or Alcaidesa or Los Varios, whatever. And I think there's a lot to be said for that. That may happen. I'd like to think that not many Gibraltarians will choose to do that, but they can do. Will that affect the rental market in Gibraltar? Not necessarily from that perspective, because not a lot of Gibraltarians tend to rent out the properties in the rental market that we are involved in. We tend to rent out mainly to newcomers to Gibraltar or people coming in to work for the gaming industry, etc., who invariably will need to have a property in Gibraltar to enjoy tax status, to enjoy the benefits that they might do from a educational point of view in terms of their children are going to school, etc. So I'm not necessarily concerned about that, but I do think, of course, there's going to be margin for people to think, well, hang on a second, it'll be easier. There'll also be those who work in let's not forget, the gaming industry that employs, you know, biggest employer in Gibraltar. 75% of employees in the gaming industry already live in Gibraltar. Already live in Spain and work in Gibraltar. So that probably isn't going to change, and the only benefit there is that they can now rest easy, that they don't have queues to come in and out. So I think, you know, it's something to keep a watchful eye on from a Gibraltarian perspective as well as from a cultural perspective.
But maybe not from a demand perspective.
And it depends where. Maybe from a studio point of view, one bedroom, you know, is someone who is worried about queues at the moment and has a studio because they just want to be here. You know, is that person going to think, well, actually, we don't really need a studio anymore. I know I don't have queues anymore. I can very easily just be in Spain. If you are going to live in Gibraltar and you want to take benefits of what Gibraltar has to offer in general terms, and you have a family, for example, in general terms, you know, studio or one bedroom doesn't cut it anyway. So I think we'll have to see. Like I said, I think there's a market for everything. Where there's an oversupply for something, it concerns me a little bit. So I think we'll see those changes. But Spain obviously is going to play a part in how Gibraltar grows and how Gibraltar manages people who may work here, but people who live in Spain. I think, you know, there's also an argument to consider and look at, which is a bit of a frightening statistic to a degree, which I've looked at, to look at other jurisdictions and how they grow. And I think it's important for all of us in every aspect to look at how other similar jurisdictions to Gibraltar function and have grown, whether it be Monaco, Singapore, Hong Kong, central London. And these, I say these places because they are high value, financial services generally driven jurisdictions, and they're small and therefore they need to grow in height, etc. one of the interesting sort of stats that I saw recently with Monaco, for example, is that I think their population is quite similar to ours. They're at 39,000 in total, I think, and I think we're probably likely to be at the States 35, something like that. Well, interestingly enough, only 9,500 of the 38,000 are original Monegasques. Now, that's not to say that Gibraltar will end up in that situation, but I think it's something to highlight. I think it's something to look at. I think Gibraltar's had the huge benefit for many years, which most other jurisdictions don't have, in that we've looked after Gibraltarians, we've continued to produce affordable housing schemes, and I think that's massively important for the local market, and it's important equally for the local market to actually take that opportunity. So I think, you know, there are all these things to look out for, and certainly we're in a great position in that we are able to see how other jurisdictions have fared, how they've grown, and what we'd like to see for Gib in that regard.
We are just about to start, we've just started now, Q4, which is hugely important for businesses. Gibraltar seems to light up in this quarter. What can people expect from Gibraltar's property market in this final quarter? Much of the same for now. I'd love to be able to give everyone a big wow and that we're going to be sort of booming, and I think it's a process. It's a bit like, you know, I think we've got a number of new developments which are ready to go or about to go, or, you know, being talked about for a number of, and it's, you know, one of the key pieces of advice I sometimes give is let's not force the market. You know, I've always said let the market drive the market, and I think everyone really wants to see this sort of boom period again, and let's get things going, and I think these things just happen, and when they're happening, you suddenly find, we're in there. Is that going to happen over the next couple of months? It's possible. We're starting to see some energy, but I still think it's early days. I still think that we need to be very careful insofar as forcing that market. Sometimes doing so can have a negative effect. And don't get me wrong, I'm not trying to sort of present this as a negative quarterly update, quite the opposite. I think we've been able to, you know, we've been able to breathe easier since June, and we now take the opportunity, if you like, to plan forward on I think what generally everyone believes will be a positive next few quarters and years to come. But I think, you know, the answer is there isn't anything wow and magnificent in my view that's going to happen in the next couple of months, other than banking on what we've achieved and continuing to grow that. And I think what's certainly the case is that the downturn in prices across the board is arrested, if you like. It has stopped and paused, and I think we're at the bottom of that curve. But whilst let's not forget that there are segments in the market that never went down. So in general terms, you know, I'm optimistic, and yeah, we'll hopefully have wow news for you and for ourselves in January during the next update. Absolutely, I think more of the same for now. Exciting things coming, and watch out and be ready for when the change comes. Right?
Yeah.
Thank you, Lewis.
Thank you very much.
Thank you.